Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to podcast episode 70, published on November 5th, titled Low Cost ESG Stocks to Buy, and more, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing news, commentary, information, and resources. Remember that you can find a full transcript, links to content, including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, just a reminder, I do not evaluate any of the stocks or funds mentioned in this podcast. Furthermore, if you're concerned about the ESG and sustainability ratings of any stock or fund included in this podcast, check your broker's online site for such information. If your broker doesn't have this information, sign up for free with Morningstar, and you can gain access to company and fund ESG sustainability ratings. Please note, I receive no compensation from Morningstar or anyone else covered in these podcasts. Also, if any terms are unfamiliar to you, simply Google them. Many ESG stocks are trading at high price earnings or PE ratios, so it's refreshing to see this article titled 10 Cheap ESG Stocks to Invest In. It's by Usman Kabir and was on yahoo.com. Here are some quotes. The ESG companies were identified based on the initiatives they have taken to become more responsible environmentally, socially, and in terms of their governance. Those that have a PE ratio of less than 20 feature heavily on this list. The hedge fund sentiment around each stock was gauged by using the data of 873 hedge funds tracked by Insider Monkey. Insider Monkey's research was able to identify in advance a select group of hedge fund holdings that outperformed the S&P 500 ETFs by more than 86 percentage points since March 2017. Number 10. Ternium Sa. Number of hedge fund holders, 15. PE ratio, 3.84. In August, Ternium Sa announced that it had entered into an agreement with Vale, a Brazilian mining company, to jointly focus on the development of technologies that will reduce carbon emissions during the manufacture of steel products. Citi analyst Alexander Hacking recently reiterated a buy rating on Ternium Sa stock and raised the price target to $60 from $50. Number 9. Kimco Realty Corporation. Number of hedge fund holders, 20. PE ratio, 24.89. In August, Truist analyst Ki Bin Kim had maintained a buy rating on Kimco Realty Corporation stock and raised the price target to $25 from $23. Kimco Realty Corporation has a stellar dividend record. Number 8. ArcelorMittal. Number of hedge fund holders, 22. PE ratio, 5.62. The company is one of the largest steel firms in the world. It has set a goal of reducing carbon emissions internally by 25%, in line with international standards in this regard. In June, the company revealed that it had entered into an agreement with Canadian authorities to spend $1.4 billion on decarbonization tech at the Ontario plant of the firm. 7. Asbury Automotive Group Inc. Number of hedge fund holders 26, PE ratio 7.91. Asbury Automotive Group Inc. operates as an automotive retailer. One of the biggest stakeholders in the firm is Impactive Capital, an ESG-focused hedge fund. On September 30th, investment industry advisory Craig Hallam maintained a buy rating on Asbury Automotive Group Inc. stock and raised the price target to $250 from $230. 6. Owens Corning. Number of hedge fund holders 34, PE ratio 9.90. Owens Corning makes and sells a range of building products in the composites, insulation, and roofing domains. It has an impressive dividend history. The company has topped the 100 Best Corporate Citizens list 3 years in a row. RBC Capital analyst Michael Dahl recently raised the price target on the stock to $97 from $94. 5. Steel Dynamics Inc. Number of hedge fund holders 26, PE ratio 6. The increase in demand for steel in the post-pandemic economy, as well as an increase in pricing because of supply chain pressures, has benefited Steel Dynamics Inc. The company was recently named on a list of 100 best ESG companies of 2021 by Investors Business Daily. 4. eBay Inc. Number of hedge fund holders 39, PE ratio 4.2. eBay Inc. has remarkably stayed relevant in the e-commerce world. The very business model of the firm is based on ESG beliefs, as it prefers to sell second-hand and used items. KeyBank analyst Edward Yuma recently maintained an overweight rating on eBay Inc. stock and raised the price target to $90 from $80. 3. Hologic Inc. Number of hedge fund holders 41, PE ratio 9.39. Evercore ISI analyst Vijay Kumar upgraded Hologic Inc. stock to outperform from in line with a price target of $78 in July. In the ESG bracket, the company sets an annual goals to improve women leadership in healthcare, reduce carbon emissions, and improve health access for underserved communities. In late July, the firm had reported earnings for the third quarter, posting earnings per share of $1.33, beating predictions by 0.21 cents. The revenue over the period was $1.1 billion, up 42% year on year. 2. Flex Limited. Number of hedge fund holders 43. PE ratio 8.57. The company offers electronic manufacturing services to original equipment manufacturers. It is headquartered in Singapore. In 2020, the firm achieved 92% growth in sustainable energy use year on year, and even used ESG standards to screen all new global suppliers it conducted business with. In May, investment advisory Citi reiterated a buy rating on Flex Limited stock and raised the price target to $25 from $22. Number 1. Mohawk Industries Inc. Number of hedge fund holders 44. PE ratio 3.55. Mohawk Industries Inc. makes and sells flooring products. As part of an ESG initiative, the company also offers sustainable carpeting and flooring options. The company also aims to offset energy used to make products by installing solar units in remote communities. End quotes. With investors showing great interest in vegetarian meat substitutes, this article is timely. It might give you some new investing ideas. It's titled, Hoard the Meat. Burger King, Chipotle, Starbucks Top Fast Food Rankings on World Vegan Day 2021 by Steve Kiggins. It appeared on the USA Today site. Here are some quotes. Only 7 chains were designated as menu movers. The report card's top ranking: Burger King, Chipotle, Starbucks, KFC, Panera Bread, Pizza Hut, and Taco Bell. 39 of the country's top 50 fast food restaurants received the lowest ranking as dining dawdlers. These including McDonald's, Subway, Chick-fil-A. The Moving the Menu report was produced by World Animal Protection, which advocates eating less meat as part of its mission to change animals' lives for the better. Cameron Harsh, Programs Director for the nonprofit animal welfare organization, described the 24-page report as a guide to help individual consumers align with the restaurants that share their values. What the menu movers in this report have done is not just added plant-based alternatives to their menus and called it good. They've actually talked publicly about the benefits of these products, Harsh told USA Today. The World Animal Protection list of dining dawdlers also includes Arby's, Dairy Queen, Domino's, Dunkin', Panda Express, and Wendy's. The message for those straggling chains, Harsh said, is to recognize the plant-based movement is an important and necessary direction for the sustainability of the planet and for their bottom line. End quotes. Now found on yahoo.com is this fine article titled 4 Mutual Funds to Rally on Clean Tech Boom and written by the highly reputable Zacks Equity Research Team. Here are some quotes. These funds flaunt a Zacks mutual fund rank number 1, strong buy, or 2, buy. We expect these funds to outperform their peers in the future. 1. Fidelity Select Utilities Portfolio aims for capital appreciation. This non-diversified fund invests most assets in common stocks of companies primarily engaged in the utilities industry and generating most of their revenues from utility operations. The Fidelity Select Utilities portfolio has returned 7.6% and 10.1% in the past 3- and 5-year period, respectively. It has a Zacks mutual fund ranked number 1 and an annual expense ratio of 0.76%, below the category average of 0.94%. This fund has significant investment in alternative energy companies. 2. New Alternatives Fund Class A aims for long-term capital appreciation, with income being the secondary objective. The fund invests in common stocks of yield cos, American depository receipts, real estate investment trusts, and publicly traded master limited partnerships. New Alternatives Fund Class A has 3- and 5-year return of 26.3% and 17.5% respectively. It has a Zacks mutual fund ranked number 2 and an annual expense ratio of 0.96% versus the category average of 1.29%. Additionally, the fund has significant investment in alternative energy companies. 3. Calvert Global Energy Solutions Fund Class A aims to track the performance of the Calvert Global Energy Research Index. The fund invests a majority of assets in companies whose main business is sustainable energy solutions. The Calvert Global Energy Solutions Fund Class A has 3- and 5-year return of 23.8% and 16.8% respectively. It has a Zacks mutual fund ranked number 2 and an annual expense ratio of 1.24%, below the category average of 1.26%. 4. Fidelity Select Automotive Portfolio Fund aims for capital appreciation. This non-diversified fund invests a majority of assets in common stocks of companies involved in the manufacture, marketing, or sale of automobiles, trucks, specialty vehicles, parts, tires, and related services. Fidelity Select Automotive Portfolio has returned 29.3% and 21.2% over the past 3 and 5 years, respectively. It has a Zacks mutual fund ranked number 2 and an annual expense ratio of 0.88%. End quotes. Now for a number of honorable mentions. These are ethical and sustainable investment articles worth reading, but I hadn't the space to review them in this podcast. 1. Title: 20 Favorite Alternative Energy Stocks with Expected Upside of up to 102% on sportsgrindentertainment.com by Christine Watkins. Quote, over the past few weeks, stocks of alternative energy companies have shot up dramatically. End quote. 2. Title: down over 25%, these 3 renewable energy stocks are too cheap to ignore. In the Motley Fool by Travis Hoyam, Howard Smith, and Daniel Fulber. Quote, our renewable energy contributors think Sun Power, Atlantica Sustainable Infrastructure, and TPI Composites are great deals. End quote. 3. Title: 3 renewable energy stocks worth buying and holding until at least 2050 in the Motley Fool, again by Travis Hoyam, Howard Smith, and Daniel Fulber. Quote, our contributors think First Solar, Brookfield Renewable Partners, and Equinor are set to thrive for at least the next 3 decades. End quote. 4. Title: 3 renewable energy stocks for beginner investors on NASDAQ. Again by Travis Hoyam, Howard Smith, and Daniel Fulber. Quote, their 3 very different responses were Bloom Energy, QuantumScape, and TPI Composites. End quote. 5. Title: why solar energy stocks are up big today in the Motley Fool by Travis Hoyam. Quote, Enphase Energy reporting its third quarter 2021 results. The company said that revenue nearly doubled. End quote. 6. Title: Here's the strongest renewable energy stock you can own in the Motley Fool by Taylor Carmichael, Jason Hall, and Danny Vina. Quote, Jason Hall nominates Brookfield Renewable as his favorite stock in a bad economy. End quote. And 7. Title: Ethical Investing for faith-based exchange-traded funds with decent return on investment in Nairametrics by Kalu Aja. Funds are the Global X S&P 500 Catholic Values ETF, the Inspire 100 ETH Inspire Global Hope ETF, and the Inspire Corporate Bond Impact ETF. 8. Title: 3 infrastructure stocks to buy right now, again in the Motley Fool by Ruben Greg Brewer. Quote, for income investors, it is a very attractive area of the market. These 3 infrastructure giants are worth a close look today. They are Brookfield Infrastructure Partners, Enbridge, and Kingdom Morgan. End quote. Well, these are my top news stories with their stock and fund tips for this podcast, low-cost ESG stocks to buy, and more. To get all the links, stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcast and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote a better post-COVID world through ethical and sustainable investing. Contact me if you have any questions. Stay well and healthy and conscious about the ethical and sustainable values of your investments. Thank you for listening. Talk to you next on November 19th. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.